All right, let's get this show on the road, gentlemen. It's 6 after on my clock. Welcome to Wall Street Beats, everybody. I'm Steve Lamar, joined today by our technicals and momentum stock technical pro Kevin Baker and our retail pro Jeff Mackey. We're going to talk, I'll bet you we're going to talk some Walmart with Jeff today because that seems to be what everybody else is talking about, but it's top of mind given today's announcement. So why don't we get started with that? Jeff, what's your takeaway on this morning's print?
Great quarter and just kind of a sign of things to come. What I was really struck by was how much progress we were just talking before the show about how little progress has been made in the AI front with a lot of kind of these end users, with the fitness apps. Walmart is having the exact opposite experience, from the supply chain to customer delivery to the way they run their kind of using these products. As $3 billion in sales, it doesn't take a lot of margin tweaking to justify an awful lot of improvement. They grew comp sales for e-commerce at 27% in the US, which is amazing, and also now $170 billion business, which puts them at number 2 by far, and much faster than what Amazon's growing. And so, Amazon's on a bigger base, but 170 billion is not a small base of business. And so when it's people just love to complain about the PE and the multiple. I tell you, a catalyst that's just not worth a shit for investing, and that's PE. So noted. I'm not buying the bottom. I understand that. But I think there's going to be a whole re-rate that goes on throughout the retail ecosystem that's going to be just like we saw with the dot-coms. I haven't seen something kind of this big since really at least in 10 years when the mainstream stores figured out how to be e-commerce. Lululemon was probably the first kind of specialty store that was built from the ground up to be e-commerce friendly and stores. And you're going to see in discount and kind of these big boxes an application of AI that's going to improve their supply chains. It's going to improve the way they run their stores, and it's going to make margins better. It's what AI does really well is it kind of just culls all the information online and figures out sort of what fits you. And you have to use that directly. And it's agentic shopping is what they call it from the store basis. But that's what Walmart's using. And you combine that with their scale, they're able to get deliveries in 3 hours or less to 95% of the country. That's just impressive. And they're able to do that as they revamp their stores, all of which is being done on a 30 billion. I'm not missing a zero there. 30 billion, which represents a big, it's a whole different world. So why do they have higher multiples? Well, I don't know. They're not launching rocket ships and just doing a bunch of bullshit that may or may not ever pay off. They're doing real things that actually drive margins. And so it was a good quarter. People wanted to kind of crap on it. It's up $3. That's kind of how discount world works. But if you look at them, Target, Costco, they're all having great years. It's you don't get on the cover of GQ talking about these companies, even though I should be because of drinking Handsome sauce. But what you do is you make money. And so they're having a great year and a great run and kind of deserve it because they're just a good company executing well. Are they going to trade at 40 times, 50 times earnings forever? Probably not. But again, my rocket launch risk is zero. And my CapEx is fine. And they don't need to go out and raise a ton of money to pay for these innovations. And it's going to change the way people buy stuff, which means you're going to have a jump ball that's going to run all through the entire ecosystem of retail. It's going to be a re-rate for the entire group, just like we saw with the dot-coms and the companies that have, the Macy's of the world, when they pretended to be online for like 10 years before they actually bothered to build it out. It's going to happen again, where you're going to see some of these companies are just not going to be able to keep up. And that's going to be the question for the Targets of the world, because it's going to become cheaper, obviously, to be an end user than it is certainly to launch the products. But the application of agentic shopping and supply chain management and customer training and just following the inventory. Walmart sells, I think, 200 million goods between marketplace and actual stores now. So keeping track of that, super hard. But if you can do it and get it to people's house in 2 hours, holy crap, that's a really good business.
So, Jeff, you're thinking a lot of these retail stocks, especially the ones like Walmart, start getting re-rated higher on multiples, even though some of them are, you could argue, pretty up there already, just
They're up there
because they're
already. We've
not.
seen it already. You know,
Yep.
it just because the risk factor is so much lower. I mean, it's 30 billion capex. They're redoing the stores. The stores are going to be more efficient, um, just automatically. I mean, it's they're just able to go out there and redo their entire chain. They have 4,700 stores, so they're all over America, and they're just going to streamline the process. They're going to the Walmart retail's always been distribution. From Sears sending out freaking just phone book size catalogs and being the first real online merchant, that was just a function of really the railroad system, really just the U.S. postal distribution system becoming more efficient. It's that's what happens all the time. Walmart itself, along with Target and Kmart, rest their souls. It's just a function of kind of the suburbs coming out there. You see these cycles that the end user is going to be the consumer, the end beneficiary of all this AI. Ultimately, has to be the consumer, or else all these companies dumping money into it are wasting their freaking time. And it just because 70% of the economy goes through the consumer, so selling stuff more efficiently is a big deal. And it's going to be dumb at first, just like it was with .com, just like it was in the days when KTEL Record says, oh, now we're KTEL.com, and the stock went up 180%. It'll be that kind of stupid at first, I would expect. But again, long and short and or indifferent, like this is going to be happening. And this is going to be where it's going to be the next level of just buy the Mag 7 and sit around. We're through that.
Yep.
That's over now. Now you got to see actual things happening, and things happening looked like a company that was doing $150 billion online, pumping that up to 107 next year. Those are real dollars. And so Walmart's a safe bet. We've already seen a re-rating. We hear from Target in a couple weeks. Okay, you have your investor day. Tell us what you're going to do. Dazzle me. Tell me how you're going to apply this tech to help turnaround, help $5 billion in capex to spread around. Plenty of low hanging fruit there, and that stock's at 14 times earnings. And as it gets cheaper, you're going to see this run through all of the stores. And again, the ones that are able to use the technology intelligently, we're three men. I guarantee not one of us likes trying on pants, to name just one thing that agenic shopping can do. Not one of us. It's so just tell me what's a good cut of jeans that fits, that's not from freaking Levi's, that is actually a current modern level denim that fits, that you can send to me and I can put them on once and say, oh, these are my pants. This is great. I'm not going to have to stand in a humiliating little stall. It's now extended that to everything. If you go on and you just ask the agenic shopper, I'm planning Thanksgiving dinner. What should I cook? What should I have outsourced? Tell me how to make this happen. You're already being able to use it for I planned a trip last week. It was great with AI. You actually can use it, and it helps you get dinner reservations, helps you do that entire planning experience. People are creeped out by the privacy factor. I get it. But again, we're American men. I'm happy to, I'm not up to really anything particularly creepy. If it's,
Exactly.
you want to look through my stuff to make my life easier, that's a fair
Have a
trade.
party.
I'm good with that.
Exactly.
Yeah.
Hey Jeff, your
Exactly.
co-author Josh Brown has put together this construct, and I want to get your thoughts on it. He calls it the halo effect and hard assets, low obsolescence, and he points to Verizon hitting new highs, which hasn't happened since I've been born, I don't think. Walmart acting so well, Deere acting so well, Coca-Cola, you can't, there's no LLM that's going to obsolete them. And I don't know if you talked to him about it, but it seems to be playing out right before our eyes.
Yeah, it's happening right now, and he's right. Josh is a smart guy. I haven't talked to him about that recently, but it's already happening, and so it's a thing that's unfolding as we go, and that's just going to make its way kind of through the ecosystem. You're still seeing, Verizon's a nice safe bet. John Deere, that's a nice big hard thing that is working, but these are kind of all of them the beneficiaries of their safer bets in a market that feels a little wobbly. We're seeing a lot of rotations. It's not a full disaster out there, but it's been a tough year if you're just long the same kind of usual suspects and sticking by your guns with that. but plenty of boring stocks have done real well. I don't buy my stocks for my entertainment. I make money for my entertainment, and then I go pay for entertainment. And so it's nice to own, it's something to be said for hard assets. You're just buying a nice boring stuff that you can go out and see and experience, and then sleep at night. Works out real well.
Yeah, boring might not be so bad for the next 9 to 12 months.
Right on, man. Let everything else cook for a while. We'll see how it's
exactly.
I honestly
see all this CapEx
got
plays out
for it. Right. I mean, it's Amazon didn't have enough retail as far as I was concerned, and I think Walmart's a tech company because they're end user for it, and they're pretty open about it. They're going to let the tech companies be tech companies, and since they're an enormous client, it's incumbent on them to say, okay, companies, you fuel our freaking.
They've got a little leverage.
Shopper. Yeah, we're going to pick one of you. We're the hugest retailer on earth in terms of stuff we sell. Everyone's making a big deal about Amazon being bigger, kind of. But in terms of selling stuff, no one does more of it than Walmart. They've been treating vendors that, with that kind of smug dispatch that you get from being the 900-pound gorilla. And they'll do that with this as well. And they're going to be the beneficiaries. And as that price comes down in terms of being the end user, it's going to translate into margins. It's a full re-rate to the retailers.
As Walmart and Costco are getting so much better at this, is Amazon share at risk? Is that? I mean, it's got to naturally take away from Amazon.
They're taking Walmart's taking real share. Not everyone is doing that just yet, but that's $170 billion that's a real store. That's 170% of a Target. That's a real business of e-commerce that Amazon just went out there or Walmart just went out and snatched. And so, it's Walmart makes 2/3 of their profits from AWS, so they don't seem to care that much. But when you're on the calls with Amazon, again, they're spending $200 billion, and it includes rocket launches and making chips and all this kind of stuff. They are historically unbelievable deployers of capital. So, Godspeed. I mean, it's not really a short thesis to say these guys are good at stuff, but it's a much cleaner story to say, listen, we're going to strip out freaking 30% of the cost of our distribution centers because we don't need as many people because we're able to just kind of do e-shipping now. 60% of the Walmart stores take in stuff without touching it. It's taken off the truck, and so you got the driver of the truck and you got the customer, and those are the people that are coming close to the goods. And that's in the entire supply chain. It's just a change in the way the business is done.
So Bakes, technically, what do you think about the chart? I mean, this has just been a straight,
Amazon or Walmart?
Straight up on Walmart.
Well, I mean, Walmart is 10 feet tall and bulletproof. And I was, I mean, this is just an absolute marvel. I mean, look at the volume. I mean, you don't get fired for owning Walmart. I mean, and then look at this. This is the long-term chart. I mean, are you kidding me? This is God bless America. I mean, Sam, had an idea, and this is what he created with it. It's absolutely incredible, and I'm with you. PE be damned. You want to buy 14 times Target? Okay, God bless you. But these guys are cooking with gas. Is it extended? Is it pretty far away from his 200 day? Yes and yes. But, I haven't heard from Jeff a reason why to sell it today. And it's.
Now, I would have loved to. I'm long it, and you're seeing a payoff from the CapEx that they put before. Because they really were kind of in the cash distribution game. But over the last 5-6 years, they've gone to kind of just putting more money into the stores, and they've spent it really smartly. It's about how these companies allocate their capital. Target's chart looks pretty good from the last year. They've got a really nice kind of base there. It's at 105 at 90. They hold on to that. They've got their investor day on March 3rd. We'll see how they do. But it's you're able to turn these companies around and kind of build momentum in ways that you weren't 10 years ago. But the opportunity is just as big. It's just as big as when they went to online. That was a huge deal. Brian Cornell did that 10 years ago. Target went on an absolute heater for about 5 years. and then they hit the wall. This is another opportunity for them to if they're going to go on a heater, it's going to start kind of in the next month.
Jeff, when was the last time they had an investor day? Target,
they have them every year, but normally they're just depressing and terrible, and they talk about how they celebrate different groups every month of the year. That generation of Target's over, so there's a new sheriff in town, and
his name is
the CEO was. What's that?
And his name is Reggie Hamlin. Sorry, I'm going.
No, I get it. It's a 48 Hours reference, man. And my comparison was like I wanted him to come in like Michael Corleone and shoot the heads of the 5 families to announce his presence and be there with authority. And he kind of did that. He kind of did a lot of the changing the guard. The concern, and you can see many gaps down in the Target chart, but last August when they announced that they were hiring from within, the concern was that he was going to be a lapdog of the old guy, and that we were still going to see this kind of persistent effort to be more than just a company that sells stuff to people. Which is if you're a discount store, you sell to everybody. That's how you do inclusion. Is everyone who respects your store is welcome to shop in your store. Which seems like a liberal idea. I'm not sure how they got lost in other crap, but they'll get some pushback from that, but there's just so many things they can do that are just smarter retail. Again, at 14 times, it's I don't like catching falling knives, but you know what? I think that they can just do so much better with the store base they have that it's not going to take much.
All right, Banks, what do you got? What are you looking at this morning?
Well,
I heard you want to look at some CrowdStrike and some Robinhood and a couple other names.
Well, no, I mean, Amazon was my segue because of Jeff saying this morning, apparently at 3:00 California Peloton time, that he wanted to talk about Walmart, and I wanted to talk about Amazon because Amazon, this is not a pretty chart at all. You got a double gap down here. Come on, baby. Here we go. Very slow today for some reason. But you're holding this 197 level. And, and I just want to hear from Jeff because he's forgotten more about this than I know. I've been hearing from Scott Galloway and some other people about, this is the AI play. And the margin expansion you're going to see is going to be mind-numbing. Okay, my terms, not theirs. When does it start, Jeff? Do we have this last quarter was we're going to hit the 200 billion capex number, and then from now on we don't shock the street, and then we see the margin expansion in the next quarter, 2 quarters, 3 quarters. When does the margin expansion become manifest?
I would like to see him do better in retail, which, I'd hate to be kind of the one sounding guy, but use your own doctor, kind of cure yourself is what's going on there. They're really not applying those efficiencies to their store operations. They still deliver really fast, but they suck at physical retail, and they've let Walmart kind of come into their sandbox and push them around a little bit when it comes to online commerce. They make most of their profits in AWS. They make most of their profits in other stuff. That's all well and good. They sell $500 billion worth of product. So just like you see with Walmart, I want to see them get their house in order, and that'll go a long way to kind of assuaging the group, whether they had that 197. I'm still long Amazon. I was really not pleased with the quarter because it's just a big number that they can't really apply to anything. And the difference between sticking to your knitting and just the number of things that Jassy's talking about that Amazon has to sort of execute perfectly. They've hired a tremendously, just a lot of very, very smart people working there. But man, that's an awful lot of moving parts for any company to be dealing with, and a lot of spread going on there. So I would like, it doesn't sound like much, and it's not where their margins are, but they underperformed Amazon pretty much, or Walmart pretty much across the board when it came to retail. And so I want to see them execute. Call me a purist, but I'd like to see Nike come out with a good shoe before I want to buy that turnaround. I'd like to see Amazon actually make money on their $200 billion in spending before I get long them.
Yeah. I like the phrase smart.
If this price breaks, if this price here breaks, what's the next level for this thing? Are we talking 170s?
Yeah, that I doubt we hit the 161.38 is this level here. I have a hard time seeing it get there.
Okay.
You know, my suspicion is that 200 billion is going to be the high watermark. I don't know anything, but that sounds like a monstrous number. And I think if they came in at 195, people would clap. Is my guess. The next level is here at 178 is the next level here.
Okay.
But my guess, this is Amazon. We've already heard their quote unquote bad news. I think it holds 197, chops around. It's going to take a long time to get to, above this 250, 258 level, in my opinion.
Yep. All right.
I got a couple of things, but then I want to go to your stuff, Steve. And it kind of ties in. It ties in. Actually, I'm going to go to CrowdStrike first, and this is mainly. I'm going to get on my soapbox for 2 seconds. I've heard pundit after pundit, podcaster after podcaster say the software sell-off is overdone, and you can't disintermediate, especially cybersecurity. And I kind of, and I go. I take another tact. I say, you can say it isn't that bad. You can't say an AI competitor is a positive. You can't. So it's a negative. Period. And
you can't say it's not going to get any worse either.
Right. And so if you're so arrogant that you say my 32 tab spreadsheet ensures me that this is undervalued at 420, this is CrowdStrike, and I pick on them because cybersecurity is supposedly the sacred cow. You'll never cut that, et cetera, et cetera. Well, my 3 parts of the sell discipline have kicked off, and let's just say this 371 number turns into $4 because of the sandbagging that is Wall Street. And let's say this is 5. All right. So you're at 100 or 80 times the 06 and the 26 and 27 numbers. So this whole, this software sell-off is overdone. I call bullshit. I really do. I think that now you have to say at every call, see, AI isn't really beating us up that much. AI isn't beating that up this much, and at the margin that they're going to show up and say, we don't need 100 seats. We need 80 seats. And, it isn't 25 grand a seat. It's going to be 22 grand a seat. And that's going to take a long time. And the market is what it is. It's a discounting mechanism. But I caution investors, especially our members, don't buy into it's not that bad. It sure as hell isn't good. And I respond accordingly. And if I was at CrowdStrike, I'd be gone. That's just me.
Yep. And these AI agents that are being created under the surface or around the periphery they're doing the work of 10 seats, 20 seats. You just don't need that much stuff.
Well, my 29th tab of my spreadsheet says it's 11. But you see what I'm saying? It's a false precision. And so, yes. I love models. I love people that are great at it. I'm not. But I just, the market has spoken, and this is going to be bad for a while. I can't imagine what they say on the next conference call that gets people saying, giddy up, buy me, get me overweight CrowdStrike again. I just don't see it. And you can insert any other software name you want into there. ServiceNow, Microsoft, Workday, I don't care. So I don't know.
More downside to come. You're not buying the dip.
I don't know if it's a hell of a lot more downside. It's more, it isn't a positive, and I want things to be good and getting better, not that bad and not getting that much worse. That's,
Great way to
what's the catalyst? What's the catalyst? I'm going to re-rate it to 110 times earnings. And I just, whatever. So I've beaten that horse. Lastly, and this will tie in, I think, into some of the things you want to talk about, and I've been negative on this for a while. This is Robinhood, and you get the 50-day coming down through the 200-day here. And, if this isn't a proxy for for Bitcoin and risk on and what have you, then I don't know what is. And the volume is picked up. The earnings got Bronx cheers. I mentioned how much I like the phrase "smug dispatch." Right? That's a well-turned phrase, Mr. Mackey. This is a problem, and I think anything to do with I'm going to say it, anything to do with crypto is the moment of truth, in my opinion. And we can talk about Bitcoin and what have you, but this is taking on water. And you need to see a V-shaped recovery in Bitcoin, I think, to make all these things worth. Kathy Wood, ARKK, ARK, Coinbase, certainly Circle, which is dead. But Robinhood, I think, is the poster child. And I think the retail investor is taking it on the chin, and it's crypto being down is a negative, and you can say it's not that bad, but it sure as hell isn't positive.
Yeah, and I think it ties into exactly what you and Jeff were talking about earlier about just the rotation out of this high-flying, crazy PE, chips and rockets stuff into more safe, stable, I can sleep at night stocks. Just why be in this risk on trade right now? It hasn't been working all year, and it doesn't look like it's going to start anytime soon. And all you got to do is look at Bitcoin, and tells you everything you need to know. That thing's down almost 50% from the highs.
Yeah, and I don't have
66 today. There's just kind of an endless bid, just kind of or an endless offer. Just it's people want to buy it, and no, it's back above 70. I don't give a shit if it's back above 70. It's just it's not a complicated chart.
No. I made the mistake of clicking Michael Saylor in my feed, and so he shows up about every 11 seconds. I should have clicked on Sydney Sweeney. 4855. This is the Grayscale Bitcoin Trust, and this is the longest ETF that's been out there owning Bitcoin. And I've got a corresponding Bitcoin level for you too. But I mean, the relative strength is 11. This is clearly rolling over. I can't hear a narrative that says that we're going to buy this, other than we've gone through. They're basically saying there've been crypto winters before, and we got frostbite, but we always survived it. Pete Townsend might call me with a lawsuit on that one. So 4855 on Grayscale, I'm watching like a hawk, and then on Bitcoin itself, I don't have a chart, but 64,856 is the corresponding low. And my guess is that if you see a print at 64,840, you're going to see a waterfall. And even though it's down so much,
Saylor have problems under 65 in terms of
I haven't. He's underwater apparently at 77, and I haven't looked at all his offering memorandums and prospectuses and the financials as to when he has margin calls and he has to cough up Bitcoin. I think they might have to take his office by storm to get him to sell Bitcoin. I don't know if he would do it voluntarily, but it doesn't matter. I mean, there's a big problem here. Now, I can't, could there be
those margin clerks? I don't think I've ever had to go chase down a cold wallet.
Yeah, we'll see what happens. We'll see what happens.
Yeah. But we'll see. Gentlemen, I have to run. I'm sorry to be rude. I've got family duties that are calling, and it's an urgent thing. You guys have a great day.
Thanks for everything.
Thanks, Jeff.
You want to cover your rest of your stocks, Steve, real quick?
Yeah, I just want to get your thoughts on. We're seeing volatility pick back up in the markets. What are your? I just want to get your reads on the SPYs and the Qs and the Russells of the world, which everybody owns either directly or indirectly through their 401ks, et cetera.
This is weakest to strongest.
We're starting to be worried.
And the SPY doesn't look that weak. I mean, we're 3%, 4% off the highs. And if you told me, if this was the given all the software that's in here, I'm amazed at how well this is holding up. And it's holding up because people are going into Deere and Verizon and Walmart.
Yep.
But look at this. I mean, this is a little ugly, but it's not atrocious.
Yep.
So,
Okay.
frankly, I was kind of surprised.
Where do you start getting nervous? Is there a place on that chart where it breaks that you start to say, okay, we might have we could have a 5-10% move from there?
650, and that's 6,500 on the S&P, give or take. Here's the prior low back in November, and it's also the 200-day. And a close below there, I think, would be a problem.
Got it.
I think would be a problem.
All right.
So that's 35 points, 4%, 5% away. But I'm surprised how good this looks given what we've been talking about so much.
Yeah.
All right, here's the Q. Come on, baby. And this looks a little worse, because of software, right?
Yeah.
But
yeah.
I mean, again, this is atrocious, and it's the same kind of thing. 580 is the number here. All right, you close below 580. That's the prior low in November. It's not too surprising because the tech is such a big part of the S&P too. So that's a level I'm looking at. You can see the volume picking up on the downside.
Yeah.
Again, not monstrous. Look at the relative strength. So it's just we're seeing that rotation. We're seeing the rotation into the groups we're talking about. And if you're hugging the index, then you hug it on the way up and you hug it on the way down. And
so
but it's got to be pretty frustrating.
Yeah.
And then lastly,
Russell seems to be where everybody's hanging out.
And you look at this IWN. Look at the relative strength. It's holding up really nicely.
Yep.
And I don't see, the volumes, kind of equivocal. But these are nice staircases: 252, 258, 271. And so it's their time. And I don't know if it's the small banks. It might be the small banks that's part of it. The biotechs and biotechs acting better, and maybe a smaller percentage of technology that's in here. But this is getting the money. Money. But I mean, for anybody that's overly bearish, those charts aren't overly bearish. They're not.
Okay.
Not yet.
Okay.
All right.
So we're constructive still.
Yeah, but I'm in the group picking business. I want to, and please stay tuned for next week. I'm going through my 5,400 charts. I'm about 30% of the way through, and I pick my 10 best, and I'll talk whatever shows I'm on next week about what I find. But just for what it's worth, I'm up 18% so far this year. So people talk about the carnage. I don't know what they're talking about. There's things to do that are making money. And I'm 22% in cash. So, life's good.
Have you added to anything in the past week or punted on anything?
No, the main things I've done, and we talked about it, is we doubled our money in silver, 2 ETFs, platinum and copper, and by taking that double off and locking in that gain and letting the house money run, that raised the 20% that gets me to 22% that I am now. And that's why I go through my charts this next week, and I'll find, do I want to short, like BITI, short Bitcoin? Do I want to add that? Stay tuned.
Okay. All right.
All right.
All right. Good stuff. Let's wrap it up.
Keep smiling.
Thanks, Kevin. Thank you, Mr. Mackey. And we'll see you back here tomorrow. Follow us on wallstreetbeats.com. Have a great day, everybody.
Thank you. Thank you, Jen.
Thanks, Jen.